Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis for foreign exchange markets. I'll start with the euro against the dollar. A lower but still indecisive spinning top yesterday. The market continues to see pressure from below and above. Above is the declining short-medium moving average, currently 107.22, plus the recent cap on prices, the May 22 low at 107.66, along with a rapidly descending February to date downtrend, currently 107.47. That's pressing down, if not actually touching the market. Below we have the considerable and interesting support from the declining middle time, currently 106.58, of the well highlighted January to May 2021 bearish Andrews pitchfork. This was pierced yesterday, but saw no close underneath it. Now, stepping back a bit, the downtrend pressure by the short-medium moving average for just over a week now is important. I would ask you to only look upwards on this daily chart at the last time the market met the short-medium moving average back at the end of March, and the resultant move lower thereafter. Be interesting to see what the market makes of it this time, whether it makes its own way or repeats what happened back in late March. Looking further below, the next support is the 2020 low at 106.35, but the better support starts from the April 2017 low at 105.68 and extends lower thereafter. Meanwhile, above, beyond the February to date downtrend, we have the declining medium moving average, currently 109.36. So far today, well, nothing much as yet. A small bearish move, well within yesterday's range and above the middle time. Cable, aka sterling against the US dollar. An interesting key reversal up yesterday, coming as it did after the previous session's counter-to-counter bullish army. It might just be that the market may have finally given up on its very recent intraday indecision. You see, prior to yesterday, it seemed the market was fed up with the failure early last week to break the well-highlighted overhead resistances at 126.72 and the September 2020 low at 126.86, which had recently capped this market. However, it was also a bit fed up with the support below between 124.78 to 125.09, which contains the 38.2% Fibonacci line at March 20 to June 21 move at 124.89. Yesterday, the market pierced down through all of the supports as far as the congestion at 124.36, but then reverted back up with the highest close since last Tuesday. Despite this overtly bullish action, prices are still within a free zone between the supports below starting at 125.09 and the resistance above starting at 126.72. So far today, we're a slightly higher open and a seemingly pallid attempt high before backing off, and we're looking at the moment as if we're making a potential immediate countering bearish engulfing pattern. But we're now running into that support between 125.09 below down to 124.78 again, and I'm not sure whether we'll actually do much more than actually go down to there. It'll be very surprising to see it'll be interesting to see what happens after that. Euro sterling, a second bearish black crow yesterday, one with a very long tongue on top. It was also a more than suitable follow-on to the previous session's significant immediate countering key reversal down and bearish engulfing pattern combination. This is now developing into something, as it was a second consecutive close below the lower time, currently 85.83, of the mid-April to mid-May bullish Andrews pitchfork. Additionally, the market made a first close below the functional support of the mid-May to date uptrend, currently at 85.46. We now have supports further below from the April 21 low at 84.70, also the broken September 2021 to date downtrend, currently 84.59. That makes up the upper trend line of the extended diamond pattern. Then there's the flatlining long moving average, currently 84.40, the rising short medium moving average, currently 84.36, and the upper trend line, currently 83.95, of the smaller and more robust lopsided diamond pattern. All this now threatens targets on the upside for the smaller lopsided diamond pattern. It has a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And also for the extended diamond pattern with a primary target X2 in the 87.15 area and a harder to achieve secondary target X3 in the 88 even area. Additionally, there is also the one final pattern, and it is a big one, which this market had previously triggered, but then also sent mixed messages on. I've spoken for weeks now, months even, of the very large falling wedge pattern, currently 84.59 to 81.46. This pattern is still in operation, but has fallen into shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves with some questions, which are now growing in number. You see, it has the most ambitious upside target of all. The target X5 for this pattern is in the 88.65 area, and that is a really big ask. So far today, interesting action. Opened below yesterday's close, and it's raised the possibility for making a potential either bullish double or constructing a bullish engulfing pattern. We're also very close to constructing a weekly key reversal for this week, and that's with only just 2 full sessions just gone. Yesterday's low was 84.90. If the market can push down to the 84.87 level or lower, and then close on Friday either below 84.94 or over 85.80, then we'd be on for a weekly key reversal here. This is something to watch out for. US dollar against the Indian rupee. A reactionary bearish double yesterday as the market's pullback up within the broken ascending triangle pattern on Monday was not as well received as some would have hoped, and prices punched down again below the lower trend line, currently 77.72 of the triangle. It wasn't by much, as it was halted by the seemingly weaker force of the rising short moving average, currently 77.60 of all things. Further below we have the lower time, currently 77.51 of the January to April bullish Andrews pitchfork. This is the time that provoked a strong bullish reaction late last week. Overall, the market is still within, just about within, the same congestion zone between 77.40 to 77.80 that was seen for the last 3 weeks. Overall, the market is still in between the previously mentioned lower time below and the middle time above, currently 78.96 of the mid-January to early April bullish Andrews pitchfork. We also still have overhead target X, and that's in the 78.30 area. This is a potential target for the whole of the 2022 action, being a possible, if ragged, bullish halfway hesitation. So far today, a higher open and a tentative attempt higher, but so far staying within yesterday's range and looking right now like a possible bullish harami maybe. US dollar against the Brazilian real. A bullish opening white Mariposa yesterday, as well as a second bullish white soldier. This was a strong follow-on higher to the previous session's reactionary bullish double. The strength of the move was shown by the very long tongue on top, which was part of the move up through some significant resistances, such as the June 2020 lower, 481.62, short medium moving average, currently 483.77, plus the 50% Fibonacci line of the June 19 to May 20 move at 484.26, and the 2021 low at 489.08. Now, prices didn't quite make it as far as the next resistance, and that's the 50% Fibonacci line of the October 19 to May 20 move at 496.58, which is a gateway to a whole load of further resistances. But prices did dip and close below the 2021 low at 489.08. In the bigger picture, we're still in between the upper time, currently at 50015, and the middle time, currently 454.05 of the January to May bearish Andrews pitchfork. This is still an early development bearish pitchfork, but it's starting to show some merit in forming and hence showing the recent bearish angle of attack. It'll be interesting to see what happens if and when the market approaches any of these times, above or below. US dollar against the Mexican peso. An interesting pattern yesterday. On the surface, it was a second consecutive, if higher, indecisive doji cross. The previous session's doji cross was a bit surreal as it was an indecisive doji cross, but it was also a key reversal up, if only just, with its low halted by the middle time, currently 1939.99 on November 21 to March 22 bearish Andrews pitchfork. Overhead, the next resistance is still at 1971.68, the April 22 low, whilst near the middle time we also have last week's low at 1940.70. So far today, a slightly lower open, but then a move higher over the high, well, the highs of this week so far, but not as yet able to test the April 22 low. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights AD Tofpik and ADM Investor Services International Limited. And here comes the final bit.